Hello, welcome back everybody to a new video, and today's video is an important one because today we are going to talk about macroeconomics, economies, cycles, where are we right now and what can we expect from 2022. Is Bitcoin going to 100k? Are we going much higher? Where is the top, or are we right now in a bear market, and are there maybe other signals from other markets where we can get some information from? Of course, there are also a lot of factors in play right now. There's a lot of stuff going on in the world. We're going to discuss all of that. I'm trying to keep it as short as possible to give you guys as much value as I can. Sometimes you will probably see me looking to the side. I have a few notes here what I want to talk about. The adoption of Bitcoin, and again the cycles of where we are right now, and how do we need to see this asset class in a perspective, because that word perspective is super important and will probably be the key factor in this video. Alright, now what I'm gonna do is first I want to look at prices and the charts, and after that we are going to look at more macro kind of stuff that could influence pricing, economies, charts, stocks, bear markets, bull markets, all that kind of good stuff. Before we do, please do me a favor, hit that like button, subscribe, click on the bell, click on all so that you don't miss anything, or leave me a comment. Share with your friends if you think this is useful. I actually think that this video is going to be very useful, so I really advise you to share it with your friends. Now without further ado, I suggest that we're going to dive straight in. I'm going to make myself small and we're going to look at my screen and we're going to look at the Bitcoin chart from a very macro perspective. Okay, so what I want to show you is that I drew a yellow line here at the top. I hope you can see it. That's right here. And that was a top from 2013. So if we want to answer the question, where are we right now, or what is the behavior of Bitcoin? Well, then we see a long up running phase with a big spike up. That's the blow off top, and then we're going down. Well, at least that was this cycle. Let's move a little bit further in time, and right now we are on the daily chart. That means every candle is a representation of one day. If we move a little bit further, then we see that further up in the year, this was end of November, there was another blow off top which ended around $1,155, and again a bit of sideways action, and then we just went up and up and up and up. Interesting to see is that when we reach this top, that this local top right here, I mean here it looks gigantic, but here it's actually just a blip on the chart. Now let's move a little bit further into time. Right now, after the top of 1155, the price moves down. We are entering a bear market, and price just goes lower and lower. I'm gonna do this a little bit faster. And Bitcoin was at that time in 2015 trading around $250, then went up a little bit to 700, and then suddenly we're pumping. Now remember, this yellow line was the previous top, 1155. We broke it here, went further, and suddenly boom, there was another local top again of 20k Bitcoin end of 2017. 4 years later, and we see now, if you look at these two yellow lines here at the bottom of the chart, that those were actually just blips. They were nothing compared to where the price is at this top at 20,000. Now if I move the chart even a little bit further again, this is on the daily, we're seeing we're going to do this tremendous bear market. Also here, this had a blow off top. The bear market kind of looks the same. You go down and you have a pump up, and you go down, you have a pump up, you go down, and at the end of the day, you know, if at the long term perspective, you're just going lower and lower, although you might pump up, but the dumps are just bigger and bigger, and then there's a bit of a sideways action that is right here, and that is also what we call the accumulation phase. That's really where you think like the price is dead, it will never come up again. This feels forever. But in the chart this was 120 days, so just a few months actually, and then suddenly we are going up again. We had a bit of a spike. This was a corona dump, move further, and now you see that the price is just pretty high compared to that 20,000 that we had before. So this was the 20,000, it's the yellow line, doesn't actually matter where I make the circle, but some say this was the 20,000, and look how much further we are right now, all the way to 66. In other words, we have seen so far that every time when we think in a very long-term broad perspective, hey, this is the top, this was the end of Bitcoin and now we're going lower, or Bitcoin is gonna die out. After a bear market, we're gonna see that up market again. Why am I so convinced that you will always or most likely see higher prices? That is because Bitcoin is scarce. I hope, by the way, that you don't hear the bell of the church a little bit further. It is because there's only 21 million, we have the halvening, so there is a kind of deflationary factor in the price in the code of Bitcoin. So that's why it is just such a super interesting, most scarce asset of the world, which is so disruptive. So if I now zoom out again and let's take it on the weekly, then you can really see those tops that I made. There was one here, and then one big one here, and now these were tops. So the question is, now that we know this, would this signal the top of the market because we just made a top, or is there more to come? I think the top is not in, there is more to come, because if we would, the tops that are being made are really blow off tops. And with a blow off top is really that in the last period of time, let me just quickly take this out real quick. In the last period of time, you're making most of the move, and we're talking about days to really make that top. I mean, if we're looking at here, the top, and let's say we take it somewhere from here, this was like, oh sorry, it's now right now on the weekly, so there was in 2-3 weeks, oh sorry, let me quickly go back to the week daily so I can show you a little bit better what I mean. I'm gonna zoom in now. Yeah, so this was really the top, and we could say here really the move went parabolic, right? So we're talking about 21 days, which actually is exactly 3 weeks. It's not exact science, but let's say we take 3 weeks. That we really see the last period of a tremendous move up, and this was then at the price of 8,000, 9,000, and we doubled in a matter of weeks. And yeah, for the first 8,000-9,000, it took us months to get there. So you always kind of have this blow off top, and then boom, this crashed down. Did we have a blow off top right now? Well, let's go to the price. We did have a top, but it was not really a blow off top, because then we kind of have a local high here, then a second, a third, and a fourth, and then kind of this one that goes down. And we have here a little bit the same. There's like, hey, we have a higher high, higher high, higher high, and then suddenly we're going down again. So it doesn't feel like a top for me. We didn't really have that super bullish sentiment where just everything goes up every day. Everyone is jumping into the market. Crypto will never die. It's going to be the new best thing. Everyone's going to pay with crypto tomorrow. Every newspaper is writing about this. Super high targets for crypto prices. So Bitcoin is going to 500,000, 3 million, 2 million. That usually, that sentiment, that idea that it cannot break anymore, that is usually the top of the market. Then we are reversing, and then you can expect a crash down. Now that is of course easier said than really predicted, or really like put the needle in there and say this is the day, because let's be honest, no one can predict the top or a bottom. I also cannot predict the exact top or the exact bottom, but we want to be in this game A, on the long term, and B, it is a matter of risk management. So how much risk are you willing to take? If you bought Bitcoin, let's say at 10,000, and it is at that time at 20,000, it's good to take some chips off the table. I mean, you just made a double. If you then see that it just crashed down, and this went super fast, in matter of days that it lost so much value. Oh, sorry, let me take that out. Let's go back to the previous bull market, where the top was 20k. Then we really see in matter of days that this was in a matter of 5 days. Let me quickly check how much that was in total. Yeah, we lost 45% ish in a matter of 5 days. So yeah, if you then bought at 10, you go at 20, and then you will lose 50% is again back to 10. So that's kind of tricky. And of course, what happens a lot of times, and markets always move in the same kind of way, always the same kind of flow. I'm going to show you later another chart why every market is kind of the same and why cryptocurrency is not super unique when it comes down to price action. That is that during your way up, a lot of times you think, oh, that was the top, because it's so damn hard to predict. So let's say we are right now somewhere here in the market, and then we're going up, right? This looks good, and suddenly we're crashing down and you think, oh my god, that was it. I need to get out as soon as possible. This is where most people then get out, and then boom, the market goes higher. And this was kind of a big drop. So if you experienced this, then you saw quite a lot of money being burned. So this is almost 40%. So if you suddenly see a 40% drop in a matter of days of your portfolio, thinking, damn, I need to sell everything ASAP, save what I have, and to make sure that I will not lose any more money. That is a very natural reaction, but then again, if the market just moved higher after that, and then you kind of miss out this next big gigantic move, which was 115%, until we kind of had this severe correction down again. There was 28%, and again, a lot of people will be shaken out of the market thinking, ah man, that was the top, now I should have gone out, and then it goes even higher. So during your way up, you really see those big drops down that look like 20, 30, 40%, and then suddenly we're rising again. So this is also how the market in general kind of plays with you. It is as a mind game. That every time the market goes high, you think, oh man, I'm gonna go back in, and you're gonna buy your stuff again. You might be in a little bit of a profit right here, then suddenly we're crashing down, that was the top, now I need to sell. Then the market goes up again, I'm going back in again, you're right here in a beautiful profit, you're going down, man, the market is now really done. And then suddenly this is the top all the way. So how do you really determine what the top is? To be honest, that is very hard to do. You cannot really say this price is the top, this day is the top. That is like no one in the world can do that. That is just way too complicated. Then you really need to be able to check all the orders in the entire world at one specific moment, and no one can put in any trade, and then you could say, hey, we see now exactly these price levels all over the world, these billions of dollars where people are buying and selling, and you can very hard combine that data and exactly pick a moment then, because I could put in a trade right now, you can put in a trade right now, and in 5 minutes we'll take the trade out again, we're buying, we're selling, so it goes super fast. So you cannot, based on that, not determine the exact price. So like I said earlier, those things that I mentioned earlier with the newspapers, the price going up, that you had a few big dumps down where people thinking that was the top, and then we're going higher and higher and higher. That probably happens a few times, and then suddenly the top is in. If you haven't heard of Plan B, I really recommend you to Google this guy. He has a price prediction model. The stock to flow model, which so far has been very accurate. He says the top should be around 288,000. There's a case to be made. I would advise you to scale out a little bit before that. That also right away answers the question, are we going to 100k? Because that seems like the magic number. My response will be yes, we are going to 100k. I also think that we are going to see the 100k this year. And I also actually think, because the bull market is already going on for quite a while, that this year the bull market is ending. First, and I need to be completely transparent with this, I thought the bull market would be ending in December, because the previous tops were in at December. We had in 2013, 2017, and I thought since the halving is also usually around 4 years, but then halfway the bull market, that then kind of perfectly coincides. So far that didn't happen, of course, because right now in January, price is dropping down a little bit, but kind of stabilizing at the level that we are right now, and more people are getting into the market, especially when you look at on-chain data. Right now we're not going to talk about on-chain data, but that's why I mean, like, I do not think that the top is in, because we have not really seen that correction and that really painful grind down, you know, where you have those jumps up and then going low. We have not really seen that right now, and actually the previous top was higher than the big top before. So that's why I'm staying pretty bullish, and right now I'd say all the prices, or the current price level, is for accumulation. So what is my price prediction? I find it very hard to name a price, but if we look at the previous cycles and where the tops are just blips, I would not be surprised if we will definitely surpass 100k, but maybe 150k or somewhere at 200k. I don't know. Yeah, maybe we're going much higher, but I like to be a little bit more conservative. So if we will reach somewhere between 150 and 200k during this cycle, somewhere in the second quarter of 2022, that will be absolutely perfect, and I think a lot of people will be very happy. Don't forget always to take profits on your way up, not when everything is crashing down, because then everyone is racing to the exit, and then the exit is very tiny, and then you see these big dumps, and if everyone wants to rush out, there's no liquidity in the market to buy up those orders, and then you get this massive spikes down where everyone's just selling on market prices, and whatever they can get for it, sell. You get a massive spike down, and then poof, you see the spikes up again. So be more conservative, just slowly sell a little bit on your way up. If we're really crashing down and kind of the price is stabilizing like we have right now, then my advice would be slowly DCA, dollar cost average, into Bitcoin and other major cryptos. Okay, quickly that I want to show you that Ethereum is kind of the same. This chart is a little bit shorter because Ethereum does not exist as long as Bitcoin, but we kind of see here the same. We have a big top up, then we kind of have a blow off phase, and then we're getting into that bear market. That was at $1,500, and now we're seeing already big spikes up. It moves a little bit more choppy and a little bit more aggressive than Bitcoin, but I also do not think that the top here is in. A lot of people are missing price targets of $10,000 for Ethereum, somewhere between 10 and 12,000. I would absolutely sign up for that. I think that is absolutely doable, because most of the time you see 80% of the move of a price in the last 20% of the time. So if we still have the majority of the move to go, also for Ethereum, let's say we will soon go back to $4,000, then a double to really have that blow off top wouldn't be weird. So then $8,000 already in reach. I do not think that from here on, boom, we're gonna have a blow off top and let's go up. So the price will move up and down more steady and more grinding. So maybe we get even more of those kinds of tops. More of those tops where we're making a new top and then blow off and going down a little bit and then going up again, and we're blowing off a little bit. I wouldn't be surprised, and then at a certain point, and I cannot tell you if that is in a month or 3 months or 6 months, you will see kind of this, and then poof, this blow off, and then we're going down, and then later on you would say, in hindsight, oh yeah, actually this was just only a blip. I mean, if you look at where the prices are right now, this is really nothing. I mean, we're at 3,000, 2,000, 4,000, which are blocks. Now we're at 10,000. So I think you will always kind of have that character in the price, but yeah, don't be scared if now the price is dropping $100, $200, $300, because if we really are going to see the blow off top, then we still have a lot of price action to go. So then just to be in the market, even if you just hold it, really, if you have no experience with crypto, just buy and hold a little bit of Ethereum, Bitcoin. That's all you need to do. Then I think you will thank yourself in the distant future, because these are just, in my opinion, one of the most bullish assets there are. Now, another example that I wanted to show you, that crypto is in this sense not unique, and we have seen that with other asset classes, is very simple, the S&P 500. Now, I need to warn you, every candle that you see here is a monthly representation. So this is the monthly, every candle is 1 month. This goes back to 1950, so just after the Second World War. And also look at the price. You see these tiny bumps up, and then we're correcting a little bit, and then suddenly we see this move up, and then we see here the price of around 500. Now I'm gonna move the chart a little bit, and suddenly you see the price of the S&P is already at 1,000, and you see that these big pumps in the past, so let's do this again, these big pumps in the past and these dumps, they will actually become tiny blips, and they look almost at nothing anymore if we are looking years and years ahead. I mean, look at where we are right now. This is almost 5,000 points for the S&P 500, and these local highs at that time around 2000, so it's just before the dot-com bubble, here in 2007, just before the credit crisis, they now look like blips compared to where the price is right now. And here they were tremendously high, and everyone said, oh, the stock market is way overbought and we're going to crash down and we will never go see these highs anymore. The world's going to change. I remember that ministers of finance, prime ministers, bankers said after the credit crisis we will never see such a growth anymore of 2-3% a year. Well, they were wrong. We have seen the biggest bull market in history after the credit crisis. So don't always believe what you see, what you hear. What we do know is if we look at something like the S&P 500 and we're looking since the 50s, so this is 70 years of data, that on a long term the price is just going higher and higher and higher. That doesn't mean that that's for everything in life. Some stuff just really stays down or moves down for a very long time. Think about maybe something like gold or certain commodities or certain specific stocks. But if you're looking at major stuff, so in this case Bitcoin is the king of crypto, then I think although it's pretty young, that on a long-term perspective, 10 years from now, 20 years from now, 30 years from now, this 60,000 where we are right now, 50,000, a little bit less, is going to be a blip at the graph. So yeah, don't worry about that. And I also think just like other assets that it would just kind of move in these blow off tops like we also have seen here, although here it was less aggressive, it took longer, but that's also because of the maturity of the market. Talking about that, because where are we then with the asset class? Well, I think it's safe to say that crypto is a complete new asset class. If we're looking at all the stuff that we can do nowadays with ICOs and NFTs, with DeFi, with all kinds of projects, stable coins, certain blockchain utilities. Think about VeChain, where you can really track all kinds of data. We have never seen this ever in history. So I really think this is the creation of a new ecosystem, of a new asset class, which will play somehow a very big part in your life in the future. So yeah, I think there is, it's deconnecting more and more and more with the stock markets or other traditional markets. There of course will also be days where the correlation is super high. So let's say in case of the Corona dump, then everything dumped, also crypto even one of the worst. And then people say, you see, we're not, there's still high correlation. So Bitcoin is not the safe haven. No, that's true, because at a real big dump or crash like Corona, credit crisis, whatever, high beta assets are being sold first. So everything that moves up, heavily up and down, something that carries a lot of risk, is being sold first. Something that carries barely any risk is being held or being bought. So right now, I mean, we can discuss it for a very long time, and crypto's not risky, or it is or it isn't. That's not the case right now. The market views crypto as risky, unstable, very volatile. You can make a lot of money, but you can also lose a lot of money, and there will be a lot of stuff built in crypto. That's kind of the general consensus. So then don't be surprised if now the stock market will dump 10-20%, that crypto will go with that dump. That doesn't mean that we're highly correlated, it just means on that very tiny time frame, those few days, we are highly correlated. And now we also have seen a tiny bear market for Bitcoin, and the stock markets are just going up and up and up and up, so there's no correlation in this case. There's also almost no correlation between Bitcoin and gold, although Bitcoin is said to be the digital gold. So It's really a separate asset class. See it as a separate asset class, and it will separate more and more and more in the future as there are new technologies being developed, new technologies being built, more stuff coming out. Like, could anyone ever guess 4 years ago that we now have something huge that calls NFTs? I didn't, and there will be most likely in another 2 years or 4 years from now new applications on crypto, on blockchain, that will completely rock our world. So I think it's a super interesting space, but really see those things differently. So where are we then in the cycle? I kind of said it already. A few interesting things that I want to show you are two things. Public companies surged in 2021. Then we're really talking about adoption, and this bull run is really about adoption. The first bull run was more about crypto raising the hand, Bitcoin saying, I am here to say I am the answer to the current banking systems, and we are something new. That was kind of the thing, but it was still very unclear of what it is, what it can do. Now, a few years later, we're seeing a lot of companies buying Bitcoin or other cryptocurrencies, activating it on a balance sheet, and therefore actually voting yes for cryptocurrencies and saying yes, we need to have this and we need to maybe protect or diversify our assets. Also, the same is actually for people with a lot of money, but also people with barely any money going into crypto. So what can we expect for this year? I think more adoption, more big companies will enter the crypto space, will buy up, will activate it on the balance sheet, just like maybe a Tesla has done, or MicroStrategy with Michael Saylor. There will be more countries, maybe like El Salvador, who will go all in on crypto as soon as they have seen that El Salvador is maybe making a lot of money or has great solutions and is really taking that front role. Things can turn around. I mean, for example, 50 years ago, Singapore was nothing. Now Singapore is one of the most beautiful, high-tech, richest countries in the world. Same for Dubai. 30, 40 years ago, Dubai was a desert. There was nothing. Look at it now. It is amazing. So why couldn't El Salvador become the new Singapore or the new Dubai in 10, 20, 30 years from now? Completely cryptocurrency based. So I think we will see more adoption. Doesn't go overnight. It will take a long time. Trust me, big companies, presidents, governments, they will need a lot of time before they say yes. There will also be a lot of resistance from other places. I mean, there were also central bankers who said right away, yeah, El Salvador, this is just suicide, don't do it. But I think this is a movement that cannot be stopped because everything is decentralized. I'm not saying that tomorrow everyone pays for Bitcoin, but it's here to stay. That is now 100% sure, and it will probably not go away. So, inflation, that will be a key factor for this year because it's not transitory, absolutely not. Of course, the central bankers said that to calm down the markets, but everyone knew this is not transitory since we have so much money printing going on pretty much anywhere in the world that inflation is the only outcome that could be. And to be honest, I thought it would be much sooner. But yeah, inflation is here. It will probably not go away anytime soon. What can you do to fight inflation? Well, two things. You can take liquidity out of the market. So take, in this case, the Fed said we will dial back on a bond buying. So what they're really saying is if, let's say, a company said I need to give out a bond to get liquidity, they will stop doing so and they will maybe rise interest rates. So the cost of money will go up. And if the cost of money will go up, then let's say your company and now you can get $1 million from the bank for 0.1%, then maybe later on you need to pay 1%. And then the 1% of course is the interest rate. It will become more expensive, so maybe you can lend less money from the bank and therefore it could be that you maybe need to fire people or you can grow less fast. So yeah, the central banks are a little bit in between right now because they have high inflation, so money becomes worth less. If you have $1 now, you buy a bread today. If you have 7% inflation, what we currently have, then that dollar is actually worth 7% less. So if the bread then next year is $1.07 and you still have $1 in your hand, you can't buy the bread anymore. That is inflation. We also have seen that in other central banks. In this case, the European Central Bank says we will not raise interest rates yet, but we're keeping an eye on it, and also they will most likely start taking liquidity out of the market. And here they also said, well, transitory, okay, maybe not. So I think central banks will keep dictating the news, and this is something that I am really looking out for, is what are the central banks are going to do in the next year. Are they really able to rise those interest rates? And if so, well then some economies or countries will go into an economic recession, because again, when it becomes more expensive, people cannot pay their debts anymore, the price of money becomes more expensive, and therefore you have less economic growth. Or are they able to kind of maneuver us out, or are we going maybe to like a stagflation scenario that you also had in Japan, that you have a low growth and a high inflation, and once they try to temper that inflation with taking liquidity out of the market and rising interest rates, right away you go into a recession. Oh, we need to print more money again because we don't want people to go bankrupt and companies to go down under. Okay, we're gonna print money again. Oh, here's free money for everyone. And then you have an economic boom again, and then right away want to see, oh, but there's now so much money in the market, we need to rise interest rates and take money out of the market, and there you go again. So this is very hard. We'll see where this ends. I think a solution could be in digital money. I will make a different video about that because else this is getting a little bit too long. But I think a lot of central banks are working behind closed doors very, very hard on digital currencies to replace the current fiat system, CBDCs. That is not a secret, but how they are going to do it and how they are going to implement it in the real economy is still a bit of a big question and a mystery. I have my ideas. Again, I will make a separate video about that. Other than that, of course, the C word, COVID, Corona, it will most likely continue this year. There will be new outbreaks, there will most likely be new variants, and there will be lockdowns, countries that are completely open, a lot of measurements, no measurements, people fleeing from one country to another, riots, there will be re-elections again in a lot of countries, a lot of important economies. And that can really shift the momentum for the major economies or the major markets. Is that something for you to concern about? No, absolutely not, because we have seen huge shifts and major events in history that were actually a non-event to pricing of stocks and of crypto and of markets. Before crypto was there, of course, we had a war in Iraq. If you bought the stocks at the day that America attacked Iraq, you would have a tremendous uprise in your stocks the day that they attacked Iraq. So you could say, oh, this is the beginning of the war, but actually it was the start sign of a bull market. And we have more of those events where you think like, oh, this is going to be major on the markets, and then eventually it isn't. Same was now for the re-election of Joe Biden. People said he's probably a bit more conservative. We will slide right away into a recession because Trump was all about business and money and pumping up the markets. And we still haven't seen that. I mean, the market is still going up. You just saw the chart. So a shift in power or in major events not always has an effect on price. So don't have sleepless nights about it. Just live more in the moment, live more in the now, and realize that you cannot affect a lot of things in life. And again, 2022 will be a lot of surprises, no doubt about that. What those surprises are, I absolutely also have no idea, but every year has a few of those surprises. And the more you get carried away by it and really act in panic, in fear, oh, I need to buy now, I need to sell now, that is usually the moment to test you, to set you off. And I also saw that a few times in the charts. Every time you think, this is the bottom now, or now we're going down, this was the end of the market, then suddenly we're going up again. So try to step back so now and then, take a kind of a helicopter view on the markets, and just always be a little bit conservative. DCA your way in and DCA your way out. So dollar cost average your way in and out, buy every week, every month, and also try to exit like that and not everything all at once. And if you really think like, hey, I don't want a DCA actually at all,
I just want to hold it for like 10, 20 years. Well, you also just saw the graph. If the S&P or other markets are an indicator of what we can expect for crypto for next 10, 20, 30 years, just buy a little bit every week, every month, and just hold it for 10, 20 years and then see where the price is. But only do it, of course, with money that you can lose. And of course, no financial advice, but I just want to give you that broader perspective on the markets. Video is a little bit longer than I hoped for. I hope you guys enjoyed it anyways. If you do, please hit that like button, subscribe, click on the bell, click on all so you don't miss anything. Share with your friends if you think this is useful, or leave me a comment. And I'll see you guys very soon in the next one again. Thank you so much. Bye bye.